All right, guys, welcome to the first episode of Option Engineer 001. All right, it worked. Hey, guys, so John here, and I'm really excited to start tonight off with a big thank you for showing up, clicking on the live button, or if you're watching this later on, reviewing this information. I hope that I'm able to teach you something as I go through my own learning process with the wide world of options trading. So, I've started to name this series of videos I'm going to be doing as consistently as I can Option Engineer. And a couple of reasons for that name is because, well, for one, we're talking about options, so that just makes sense. And me being an engineer, I need some structure in my learning process and in my life in general. I like things to be in order. And I find that options really does fit this mindset really well. When you can trust in the numbers, where you can not only qualitatively understand something, but also have the math and the numbers behind it to prove whatever it is that you're trying to understand. And also, I believe that options trading does give us the ability to engineer a bit of our future. We're not limited to the constraints of simple buying stock and holding it forever, which we'll talk about in this episode. And in that sense, I hope that this is kind of a little play on words where we're actually engineering our options for our own life. So that's kind of where the name Option Engineer came from. But let me go ahead and just introduce you over to what we're going to start to cover in this series, and we can go from there. So in every one of my option engineering episodes, I want to be able to talk through my portfolio in a way that is a bit more transparent than what I'm seeing others able to provide out there. There's great content being provided by a number of different folks, and they are more knowledgeable than I am. I will absolutely cede that fact to them because they've been doing it for many, many years, and I'm in the process of going through that journey myself and self-educating along the way. But what Option Engineer is set out to accomplish is to be a transparent documentation of my own options journey. Like I said, hopefully I'll be able to teach you something along the way. And as I learn, I want to teach. But I'm not going to go and blow smoke up your butt and just say that I know everything and that this is my, that this is what I was born to do. I'm certainly passionate about the learning that I'm going through. And I want to share that passion with you because I certainly do believe that when you're able to add value to somebody else, not only is what you're learning adding value to your own life, but the ability to share and to have that community is what it's all about. So again, going back to that structured approach, I want to have a format to these little videos. And what I'm looking at right now is to go through from the beginning and how my overall account is going. If I'm over here talking about the profitability of options trading and my account is sitting at all-time lows every time you sign in, you need to start paying attention to those types of things. So the gurus that are out there that you'll watch, they don't necessarily show you what's behind the curtain. I want to go ahead and stop that behavior from the get-go at the beginning of every episode. So we'll start with the account trend, and then we'll go deeply into the platform and talk about my portfolio and doing any trade analysis, just kind of walking you through my thought process of any trades that I made that day. And once we've gone through that and we've kind of had some time in the platform together, we'll talk about a certain concept, whether it's a slide, whether it's a drawing, whatever it might be that kind of helps you learn something that I've come to understand myself along this journey. And hopefully you'll be able to take something away from it. And I like the inspirational quotes. I think that by having some of the wisdom of other people impart upon us, we'll end all the episodes with a quote of the day that helps ground us to understand that life is not all about options trading. There's a lot more to it that we need to appreciate and respect. So let's go ahead and keep going here. So unfortunately, I didn't have this brilliant idea of tracking my daily net liquidation value until yesterday. So I have the beginning value of my account. I put $10,000 into this Tastyworks margin account. I opened up the Works account, which allows you to trade on margin and do everything when futures and all these other options pop up for us. But I didn't track it day by day. So I do have a little bit of a smooth line, which it was not that smooth. It was pretty smooth along the way. But we're sitting right now at pop over here, 10,290 and 67. So we're up $290 in net liquidation value over the couple of weeks that we've been going here. So, the overall market's on a huge tear right now, so I'm not going to give too much credibility to this value yet. It's way too soon to say. But as time goes on, as we continue to get to know each other better, you'll be seeing my performance along the way. All right. And then for overall portfolio health check, we're going to go ahead and jump into the platform at this point and kind of talk through where we're at. So here in the platform, you can see the value that we just talked about here and our overall portfolio level. Right now, I couldn't really draw a better position to be in. I think we're about where we want to be. Very nice overall sloping curve with a overall portfolio delta of only -8. And so right now, not a whole lot of activity to do here. We're only $3,000 or so invested into the portfolio. So let's say about 30% invested. I do want to get that eventually to around 50%. Right now, I'm only trading in defined risk strategies, as you can see down here. And that being the case, it doesn't make a whole lot of sense to have more margin reserve sitting in cash than 50% or so. So over time, as opportunities pop up, I will be looking to put more trades on and fill this portfolio up a little bit more. Now, unfortunately, today was a very light day. I do have a full-time job, and it was quite a busy day at work. And also, I had a lot of activity. If I go to my activity page here, if I look at the yesterday, I had a significant number of trades, 6 trades filled, 1 closing, and 5 that were opened up. So I put a lot on yesterday, and that just didn't really leave a whole lot of good opportunities for me to get into today. So no activity there. But what's nice to see is that even though no trades were made, as I used in a previous video, I'm sculpting like a statue out of clay here. And my portfolio changes every single day. It gets a little more characteristics, a wrinkle here or there. But even with no trades being placed during the course of that day, it's fleshing itself out even better. It doesn't require constant trimming, constant pruning of the bushes to keep it looking in the correct, in the correct way. So very happy overall with how the portfolio is, and that's about it for the portfolio review today. Short and sweet. When we do have more exciting trades, we'll definitely look at it. One thing I'll mention let me see if I can zoom in here. There we go. So as I zoom in, one thing that I want to look at whenever I have positions on that are at risk is I want to look at where they are in, sorry here, let me have some technical difficulties. I want to see where they're at in terms of the rank of the percent gain. And whenever you do this, you want to look for potential adjustments that you need to make in your portfolio, as well as potential trades that are ready to come off. And this is one where I definitely can give some value for you guys if you're new to options trading, is I'm going to look very briefly, and this is how quickly it is for me, or for this strategy that I'm talking about here. So by sorting all of my positions by basically the worst shape to the best shape, my worst position right now is Wells Fargo, which is down 21%. So if I look at this one, I'm very mechanical in the way that I want to go about my adjustments. So as I look into the delta value of the individual legs of this trade, so this was a put credit spread. So I received extrinsic value of $62 on this trade, and it's a bullish trade. So my overall portfolio balance, was pushed in that direction from that trade. Whenever I do this, I'm looking for the short strike, which is right here. Let me see if I can grab this guy. I'm looking for the delta value of the short strike. And when that value, which I originally set at 30, when that value breaches 60, at that point is the only time in my current understanding, again, I'm not an expert yet, but at that point is the only time when I'll be looking to really make an adjustment. Right now, I've got time in my favor. If we look at the actual chart of this one, I'm not being tested all that difficultly here. I've got some room before it gets really too far gone in that direction. But when it does breach that short strike and start to go into the red area, I will expect to see that delta value, achieve that 0.60 or greater than value. All right, so looking at that, my Wells Fargo is not a position to be worked on. Same deal here. We're only at 37 delta on that, so I'm just going to let time work. On the positive side, let's go ahead and sort this a different way. Got better news. So I've got a trade here, FXE, which I put on. Let's go ahead and show you here. I put this guy on a few days ago, really not that many days ago, and I don't know if I can see where I put that on, but maybe a week ago or so as an iron butterfly. I think it was $5 wide, and it has approached my profit target of 25% of maximum profit. So if you look here, I'm going to zoom in for you. As soon as I placed that trade, I went ahead and created my good till canceled closing order at the maximum profit target. Okay, hey Manny, how's it going tonight, man? 33 delta negative. I'd love to see a screenshot of that. You should, if you want to share, would like to see kind of what you're looking at, just to get some outside perspective on it. So, but I definitely agree with being short the market right now. Good call there. So, alrighty. So my FXE position, it's approached at 25%, and what I'll be looking for tomorrow is really as soon as the market opens. And as I'm talking through here, it may be the wise choice. I'll look at my calendar. If I can be by my computer when the market's open at 9:30 my time, I might take this good till canceled order off and watch this guy. Because what I don't want to have happen is I have an order placed here for $1.85, but the whole night's going to pass. A lot of theta is going to decay away this option. So it could be that I could get even more profit if I just wait and intentionally place my own closing trade. So I'm probably going to wait on this one, but I'll have to think that one through just because I'm not sure what my day looks like tomorrow. And aside from that, everything else is just slowly working its way up. That theta is slowly decaying away the option value. And we'll just see what happens as time goes on. All right, so let's go ahead and go to the last section that I want to do on these videos, and that's to talk about a certain concept. And this is as much for me as it is for you guys, and I hope you get something out of this as well, because I love to read books. I love to continue to expand my understanding of options, because I just think this world is fascinating. So what I want to talk about today is this concept of certainty among uncertainty. And so which way do we go? If you have invested in stocks or just more traditional investments like real estate, there's comfort in long-term thinking. There's comfort in thinking that the stock market always goes up. Just don't look at it day to day, come back 30 years later and you'll have more money. And yeah, in most cases that's true, but we will look at tonight a case where that's not the case. And that's going to be the Japanese stock market, kind of spoiler alert there. And where we're going to go at the end of this is kind of explain some of the reasons why options trading can give us that sense of certainty, even when there is so much uncertainty in the world. So let's go ahead and get into it. So why stocks? So if you've been anywhere around the world of the stock market, you probably know the name Jack Bogle. He's pretty much an icon in this world because he was the founder of Vanguard, who is the company who created the very first mutual fund and mutual index fund, I should say, which was all about low cost, buy and hold, and just cut out all the rest, cut out all the attempts at active management. And he combined with Jeremy Siegel, who was the author of one of the best books on long-term stock market investing called Stocks for the Long Run. Those two guys really helped cement that mentality of buy and hold. The stock market goes up. You've got long-term economic growth in your favor, especially if you're an American, just given the history of the American stock market. And that blips will always happen. We go into these periods of exuberance where we're going to have that 20, 30, 40% correction in the stock market, but we always recover, and oftentimes the recovery isn't as bad as we think it would be. So let's take a look at this. Here is the chart that gives a whole lot of investors a whole lot of comfort. And this is from 1900. Might even go back a little bit further than 1900 because 1900 is right here. 1890 is the earliest I've seen a chart of the stock market. But this is the Dow Jones from 18 something or other all the way up to current day. And it's on a logarithmic scale, which allows you to kind of watch in a smooth curve up in this direction. But you see the great stock market crash. And looking back in hindsight, it doesn't look that bad. But these charts oftentimes miss what it's like when you're actually there in that moment experiencing those issues. But you can see the long-term trend is overwhelmingly positive. So if that is the case, why spend additional time, your talents, trying to actively beat the market when it's going to go up anyways? Well, let's take a look at an example when it doesn't look exactly like this. And Japan tells a different story. So this comes from tradingeconomics.com, but you can find charts of the long-term Japanese stock market really anywhere. And in the 1980s, that was really when Toyota and the Japanese electronics scene really was taking off and taking the world by storm, where we thought that America was going to totally get taken under by the Japanese economic powerhouse that they were becoming. And there was a ton of exuberance in the stock market. They were buying buildings at ridiculous prices, and their stock price went up, as you can see here, from under 10,000 to just almost touching 40,000 at the peak of their bubble. And then it popped, and it stayed deflated for a long, long time. From 1989 at the peak, really to now, we're just now getting to about half of where it was. So this is a 40-year drawdown, I think it's approaching at this point, maybe a 35-year drawdown or so. And that's a different story. So if you talk about long-term investing to a Japanese, middle-aged Japanese person compared to a middle-aged American, you're probably going to get a different sentiment. And I just want us to be cautious of the fact that just because thus far America has been able to recover from their stock market crashes, you don't know what's coming around the corner. And so this is where I really do think that we can create our own certainty as options traders. And we can do this because we can create our own game. We're not limited to just buying stock. We can buy and we can sell. We don't have to just be bullish. We can be bullish, bearish, or neutral. We don't have to only have that. We can define our risk, or we can have undefined risk. We can choose the probabilities of success with every trade we make. We have so many different dimensions that we can look at and choose our level of success and basically make our own game. But among all these different little aspects of how we can control our destiny, I don't think any is more important than our overall portfolio management and the ability for us to manage our portfolio in a fundamentally different way than you do with normal stocks and bonds and real estate and everything else. So what does that look like? Stock market portfolio management versus options portfolio management. When it comes to diversification, you only have really the ability to diversify across asset classes and different stocks and size of companies and things of that nature when we're talking about our normal stock portfolio. And we do this, why would we diversify when we know that stocks have the longest return, from Jeremy Siegel's book? Well, we do this because we want to diversify and have uncorrelated assets in the portfolio, right? Well, the problem with that, and it definitely is a problem, is that having diverse correlated, uncorrelated assets in your portfolio only works or only matters when there's some sort of shock to the system, when there's something that's causing your portfolio to take that drawdown. And during those times of distress, and I really should throw a chart in here, I'll do this on a future video, but during times of distress like 2008, 2009 in America and across the world, the correlations of almost every asset class goes to 1. Everything moves together. It all goes down. So the only time that you really want that portfolio insurance through diversification, it fails you. And that's about it. And this is a screenshot of Personal Capital's way of kind of visualizing a portfolio here. Now you take this to the other side with options. And as we mentioned before, you've got diversification across asset classes, time, expiration, contract time, strategies, direction, volatility, etc. you have so many more ways of diversifying that hold up in the test of time, no matter if you're having a crash or not. You can also control those correlations. If you have a great opportunity in bonds, which are negatively correlated to stocks, but you want to overall push your portfolio in a certain direction, you can just take the inverse of that trade in your bond position and impact your overall portfolio in the way that you intend. So a lot of creativity you can have there. And also, this being a big one here is that you have leverage in your portfolio that if you can manage it responsibly, as I mentioned, having a cap on how much you invest at a given time, that leverage is only going to enhance your ability to beat overall long-term holding returns. So that was our little discussion for the day. So what I want to leave you guys with is our little quote of the day, and this comes from Albert Einstein, and it says, "Strive not to be a success, but rather to be of value." And I thought this was a great quote. This popped up on my app today as I was going through and starting my day. And that kind of prompted my idea to have this conversation with you guys. And the reason why I think this is a valuable and pertinent quote today is because I don't want to just be successful as an options trader. I certainly do. I certainly want this to be the way that I continue to grow my wealth and hopefully achieve my own, freedom. But I don't want to do it just for my own success. I want to hopefully be of value to you guys, whoever's watching and listening. And if I'm able to do that, if I'm able to teach somebody and use whatever talent I have to communicate what I'm learning and to share the passion that I have for what's going on right now, then I will be of value to you. And that's my ultimate goal here as well. So with that, this is the first episode of Option Engineer. I hope you guys enjoyed it. We'll see you guys on the next side. And take care of yourselves. See you next time.